Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, I'm giving away 100% free access to my brand new breakthrough full trading course. This is 8 videos over 10 hours of pure amazing and powerful strategies. This is my most powerful systems and strategies that I've used for the last 16 years. And I'm giving it away for free. So this is what I want you to do right now. I want you to go to johnsfreegift.com, or there should be a link around here somewhere, a button or in the description or somewhere in there. Click on that and you can go get free access to my brand new breakthrough trading course. So go to johnsfreegift.com right now. Go to that right now, guys. You can get full, complete, free membership access. Go do that right now. Hey traders, today I want to talk to you about why the Fed is dead wrong on inflation. Well, at least the article says so anyway. So I tend to agree. But also, guys, what does this actually mean for investments, for the economy, and for what's coming in the metals and miners? That's what I want to cover today. And even when it comes to commodity prices. So I really want to cover that and a result of investments that's happening right now, and what we could expect moving forward. Now, this article that I'm seeing right now is on Zero Hedge, and what this article was talking about is that the Fed is saying that the inflation is transitory, right? So therefore, guess what's happening with gold right now? Gold is not really doing much. People are starting to freak out about gold, like, oh my goodness, gold's dropping to the floor. And here's the thing: this is why, and I totally agree with this headline, why the Fed is dead wrong on inflation's 3.5 trillion in savings for a sunny day. This is absolutely incredible. Now, here's the thing: is I really want you guys to think about this. Okay, you can go read this article on Zero Hedge if you want. I'm gonna read and point out some main things here in the article today in today's video. But I really want you to think about this from an investing point of view, right? Because yeah, whoopee-doo. We can learn about how what's going to happen with the inflation right now, what's likely to happen moving forward, and what's the cause-effect relationship that's going to cause that inflation, and then also what's the cause-effect relationship on asset prices, and therefore what can we actually do about it? Make sense? Now I know I went through a lot of stuff just then, but that's what I want to cover in today's video. Firstly, what's going on with inflation? What's the cause effect that's going to cause the inflation to do what it's going to do moving forward? Then also, what's the effect on the asset prices likely to be moving forward from that thing? Then obviously, fourthly, is where do we actually position ourselves to actually make sure we're benefiting from this inflation that is happening, and that I totally agree with this article here, why the Fed is dead wrong on inflation as well too. Right, so guys, this is more like big picture stuff. This is, if you want the technical stuff, you can grab that free trading course with the link in the description there. It is free trading course. And someone asked me, like, why am I giving it away for free? I'm giving it away for free. I normally do charge for it, but I'm giving it away for free right now because I really do want to help you guys. And obviously some of you guys will become private clients, but most of you won't, and that's still okay as long as I can actually help you and help you understand these markets a bit more. And that's obviously the reason why I'm giving away the trading course for free right now. It's just delivering goodwill, that's all. So let's actually talk about this here. Firstly, let's talk about inflation. So right now, the Fed is saying that inflation is transitory, right? Inflation's high, but inflation is transitory, and they expect it to come down. Therefore, you've seen a pretty big hit in what? Mining stocks. Even commodity prices are starting to pull back a little bit, and then even gold, metals, miners, gold, silver, mining stocks, and also commodity prices are starting to pull back a little bit, right? So you would expect to see some sort of a dip in inflation. I would expect coming with the next reading, especially what's happening right now. We're starting to get a bit of a pullback. Even maybe oil is starting to flatten out a little bit, but I believe what I just said there is to be true. Flattening out a little bit across all markets, and then we're likely to see another boom, right? So inflation's happening, or that's what's happening. But look at this here. When it comes back down to this, obviously we're looking at, this is the actual savings rate of what's going on right now in the markets, right? So if I open up this, let me actually bring on this chart through here, and let me actually just bring up this chart through here, like so. You can see this is the personal savings rate, and you can see that the savings rate was pretty much, we had a bit of a spike back in 2012, but every single time we get a spike up, guess what tends to happen? come back down to normal prices, right? Around this 5 to 10% range. And we can see this big spike up here is obviously because of what? Because of the government keeps printing money and the government keeps providing this stimulus package, right? And so, but as you can see, what's happened is it came down and then suddenly they got another scare. And then obviously the market spiked, the savings rate spiked again, and now it's coming back down. So even though we've come back down, we're still nowhere near where we are down the bottom here. So firstly, what we're looking at here is that the savings rates are still quite high compared to normal. Let's actually go back to this article, right? So we're seeing saving rates are quite high as normal. Here's the thing here is the best measure of excess savings is the massive liquidity building up in bank accounts. Households are saving for a sunny day. The money remains in bank accounts because people want to spend it when they can. Expect a normalization of service spending followed by long periods of unusual high spending. What do you think that means? Right now, right? Normalization of service spending. So maybe just pulling back a little bit. Now the weird thing is, right, the savings rates are high, but on the same, because there's so much printing of money, spending is through the roof, but so is savings. It's like, and the government thinks that that's going to be transitory. Wait until these excess savings here start to actually get really pushed into the economy, right? And so if you look at this, you can see here that by this metric here, as of May, there was about 2.3 trillion in excess savings. What is striking about the chart above is not only has there been a surge in savings with the introduction of new stimulus packages, there's savings, massive stimulus packages being pushed into the markets, a lot of spending, a lot of savings. But not only has there been savings through this, but savings have remained unusually high between packages. For example, in May, even when services are opening up, and with the March stimulus fading, the savings rates were 12.4%. Clearly, spending will likely need to increase further just to stop the excess savings, which in turn is a result of the continuous generous government's handout. And you can see this here, right? You can see how that the excess funds piling into bank account. This you can see here. This is normally the trend of the M2, and obviously because this is the differences of the trend that was normally happening, and then obviously this is the difference, 3.2 trillion. Now that's obviously where things are really starting to pick up quite massively here. So you can see here that as of this chart above, as of May, there is 3.5 trillion in excess savings. Excess M2, which is the printing of money, with the vast majority held by households. So there's households are still holding a lot of savings here. It's up almost 20% higher compared to the spending of the 2 years prior here, and you can see that chart there. But one thing I really want to share with you is look at this chart here, right? So you can see here that the normal rate is this dotted line down the bottom here. That's the normal rate. This is the actual savings here, and remember what I said before about whenever we get a little spike in savings, it comes back down to normal. So as you can see, the forecast here is that it's actually expected to come back down into 2022 and then normalize. So with all the extra stimulus that's coming into the markets right now, which is continued massive, like look at the retail sales, massively high. Pushing up massively high. Push, right? Push up massively high. Spending's like crazy, but so are savings. And there will come a point in time where savings, right? Where saving, especially the way that they're printing the money right now. If they keep doing what they're doing right now, which is just keep printing more and printing more and printing more, people are going to start to lose faith in the government. Now, it may take a good couple of years, but there's going to come a point in time saying, man, this thing is worthless. Like, I really need to start to spend. And there's going to come a point in time where this money start to flood into the system, and then we're likely to see hyperinflation coming. Hyperinflation, because the government's going to keep printing more and more and more money. So as more and more money comes, more money is spent. But also, guess what also is increased? Savings. Which more money is spent, which is pushing inflation higher. savings rates are going up, and there's going to come a point in time where they're going to feel safe, they're going to feel comfortable, then they're going to start to spend that money, and guess what? Their savings is going to drop, which is going to push the inflation up even more. This is not transitory. The inflation here is not transitory. Now, in a minute, I'm going to talk to you about what's the best investments for when it comes to what's happening right now, but it is not transitory, right? This is where we are going to be in. Now, we may see a flattening out period. So we went through and we saw a big move up. And now we're starting to get a stabilizing effect in a commodity price and so on and so forth. The stabilizing, flattening out period. But expect another massive leg up coming soon. Especially when these savings rate, especially as we lead into 2022, which is only 6 months away. From now to 2022, as predicted, they're going to start to really push this here. And the extra stimulus is going to come into us. Oh my goodness, guys. This is going to be on like Donkey Kong. That's right. It's going to be on like Donkey Kong. And so you can see what's happening through here. Now, here's the thing is that the Bank of America view, however, today, excess liquidity savings should be viewed differently, not as income or wealth, but as an ongoing source of funding to make up for lost time. The reopening of the economy and the fiscal stimulus of the past year are not a sugar high that goes away quickly, but rather they will trigger a long period of high spending, hence high inflation. And I 100% agree with what they're saying here. High inflation. So guys, here's the thing. Massive amounts of spending equals what for companies? Massive high profit margins, right? So what do you think is going to happen to the stock market from now through the end of the year? If this is the case where they're going to keep printing more money and they're also going to start to spend more money, guess what's going to happen? Profit margins are going to go through the roof. Guess what's going to happen to the stock market? Or guess what's already happening right now to the stock market? One of the greatest bubbles of our lifetime. But guess what? We can ride that sucker all the way up. And so for this next 3 to 12 months, 3 to 6 months from now through the end of the year, as of doing this recording, that's the reason why I am massively long, especially in the tech sector, because a lot of people love to do spending online. So the online industry, the tech sector, is likely to go bananas, especially when they start to feel safe and they start to spend more money. And then in a result of that, guess what? Not only that's happening, but the retail sales are already up right now. That's going to make it all go up, and things are going to get absolutely crazy. Then we're going to start to see the flattening out of inflation go through a massive boom of inflation, and that's going to see things go absolutely just burko. And that's when you see things like gold, silver, and also mining stocks are going to go absolutely crazy. Now that inflation period might not really kick in until 12 months from now. So we may just see a flattening out period in the mining stocks, even in gold and silver. Like we may not do much for another 6 to 12 months as this happens. But one of the greatest super cycles that's underneath our feet right now is the mining stocks. That's the greatest super cycle right now. Even gold, right? Because as this thing continues to push inflation up, guess what's going to go? Guess what's going to go balmy, burko. When this thing starts to really heat up, it's going to be too late. And that's where like gold and especially mining stocks. When this thing starts to go, we're going to start to see some explosive moves in the markets. And so there's the cause-effect relationship as things go on. But remember, guys, I personally am in gold, silver right now, and I'm also in the mining stocks. And that's why I've always had, if you've been watching my videos for quite some time, I've always had a 2025 view. Now, I say 2025 because I don't know. The bull markets may start this year in the mining stocks. Like it might just start to really make massive moves. In gold as well too. I don't know. It may be 12 months from now that we really start to kick in that big bull move and we start to do that. I don't know. You know what I mean? It's like, it may be another year and a half before we start to see the bull market. But I'm very, very, very confident by 2025, looking back, we would have experienced or we would be experiencing one of the greatest super cycles we've seen in probably 90 years. You think the good old cryptocurrency boom that we saw just recently, followed by the crash, is big. Wait till you see this. So you guys I totally agree with Peter Schiff, by the way. Peter Schiff is very, very, very big in pushing gold and also mining stocks, and I totally agree with him. And this is the reason why I agree with him right now, because of this what's actually going on now. Plus, also, we're just starting the next mining boom, and everything goes in cycles, right? We went through a mining boom for a while, and then mining's been very, very, very quiet. So has metals, right? They've been very, very quiet. We haven't gone through a mining boom for a long time. So when we go through a mining boom, then we don't go through a mining boom. Guess what comes next? Then we go through another mining boom, and so that's where, like, for me personally, like, I think us here in Australia is one of the greatest countries to live in over this next decade, because we're going to see one of the greatest economic booms, not only here but around the world, when it comes to yours. Yeah. So there we go, guys. This is a bit more of a bigger picture when it comes to yesterday, in the last few days, when it comes to gold and silver. That's more like short term, guys. Right? Don't get a little mixed up. Short term, I said we may get a little 1 or 2 down day. This is the overall big picture. Well, right now, we're seeing the inflation, the cause-effect relationship to inflation is going to come from a lot more stimulus, and the savings money is they're going to start to use that savings, which is going to send inflation through the roof. We may see a flattening out period, but it's going to see through the roof. And then as that spending is happening, it's going to send profit margins through the roof, send the stock market through the roof. Which is or through the roof even more. We're going to continue seeing a massive melt up, massive boom in the markets, and then also what's going to be on the other side of that, which is going to be inflation, and that's going to start to see gold, mining stocks see one of the greatest bull markets in history. And those who are patient right now in the gold and the mining sector are going to do really, really well. And those who are already in position in the stock market, like me and my private clients. By the way, if you're interested in becoming a private client of mine and you'd like to get weekly coaching from me, then go to Get Johns. That's Get Johns, JOHNS, help, getjohnshelp.com, getjohnshelp.com, Get Johns, JOHNS, getjohnshelp.com. From there, you'll be able to fill out an application form. I'll personally speak to you and we'll see if we're a good fit if you want to join my coaching program, and I'll show you the trades I'm doing and so on and so forth. But on a result of all that, guys, as I was saying before, that me and my private clients right now have a portfolio that we're very long, because we're seeing what's happening right now. We're in the greatest bull markets in one we've ever seen in history, and it's only getting, like, we think it's gone up a lot now. It's only getting started in the markets, and we are only getting started by all this extra stimulus and extra printing and extra movement in the markets right now. And from that, as I said before, massive melt up phases have already started. And so those who are long, like me or private clients, tech sector especially, gonna go bananas, absolutely bananas. They've already started to go bananas. And then on the other side of this, which may be flat for a little bit, is going to be gold, metals, and miners. And we're going to see one of the greatest booms in history that we have ever seen. So I hope this helps you out today, guys. Once again, guys, if you'd like to join my private client group where you're getting access to my trading system strategies and also access to me as your coach, then go to getjohnshelp.com, get JOHNS, Johns, getjohnshelp.com. Fill out the application form. I'll then personally call you to see if you're a good fit. But if not, guys, if you just like to get some free help, or you want to get some free help, then use the link in the description to grab that free trading course I'm giving away. Speak to you soon, guys. Hey traders, I'm giving away 100% free access to my brand new breakthrough full trading course. This is 8 videos over 10 hours of pure amazing and powerful strategies. This is my most powerful systems and strategies that I've used for the last 16 years, and I'm giving it away for free. So this is what I want you to do right now. I want you to go to johnsfreegift.com, or there should be a link around here somewhere, a button or in the description or somewhere in there. Click on that and you can go get free access to my brand new breakthrough trading course. So go to johnsfreegift.com right now. Go to that right now, guys. You can get full, complete, free membership access. Go do that right now.